All right, guys. All right, guys. Let's get started. Trader Dan here. Can everybody hear me okay? Let me go ahead and turn this music down. Can everybody hear me okay? Yes, 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 yes. All right. Some of you guys couldn't hear the music. That's okay. It's not important. Let's go ahead and get started. So we're going to cover fibs. Okay. We trade, I teach you a micro and a macro event. Okay. And that micro and a macro event, I teach you how to trade multiple different setups, whether they're long, short, pullbacks, inside swing, outside swing, it doesn't matter. I trade them all, right? Because if you do your fibs correctly on the inside and outside swings, they don't lie. Market's got to move price, it's got to go somewhere. So, with that being said, you guys know that those of you who have been through the training, this would be an A, that would be a B, that would be a C, and that would be a D. And if we measure from A to B on our fibs that I give you, that will give you your target. So you have your target already in place. You're looking for a pullback into anywhere from that 39 to 71%. There's different ways to do this. We'll go through a few of those setups. This would be your C phase for the long, and of course you get a break of structure here. Sometimes you get a false break, but most of the time you get that break and it goes on the micro. On the macro event would be the bigger time frame. We're not gonna cover. This will probably be like a 2 or 3 part series video, just because there's a lot to cover in this, right? So what is this move? Let's talk about this move for a minute. When this moves from A to B, this is called a imbalance, okay? When we pull back from B to C, this is called a balanced move. Now the question remains, is this balance going to pull back and then swing lower? It could. Or do we break out and create another imbalance, right? Market's nothing but imbalance, balance, imbalance, balance, imbalance, balance. Going to supply, demand, and taking out liquidity, whether it's lows or highs. We'll get more into that. There's plenty of education videos for you to go through and check these out. I've been trading for over 2 decades, okay? So coming from an institutional perspective. So this would be a long. This would be an A, that would be a B, this would be a C, that would be a D. If I pull my fibs from here, that will give me my target. If I pull my fibs from B back to A, that's going to give me my pullback zone to go long. I will show you this. You'll be able to copy my fibs if you want to. If not, you don't have to, but this is the way the market works. On the short side, that would be an A, that would be a B, this would be a C, this is a pullback. That pullback is a balance. We're pulling back into a balance move. Sometimes POC will shift in these areas on order flow, and that's point of control. This is telling you where buyers should pick up price, sellers should pick up price. So not going to spend too much more time on this. We're going to go through some more. All right. So let me take off. This is not the fib video. I mean, this is the fib video. These are fair value gaps with our indicator, right? It marks these up for you to take trades. I'm just going to right click on here, go to indicators, and I'm going to take this off. These are advanced fibs. They're not your normal, or advanced FEGs. They're not your normal. All right, so let's talk about this move for a minute. I trade a 1 minute Fibonacci candle. I have a 5 and a 15 set up, and I trade on a 1 minute chart. And I trade Fibonacci candles. Now I use a multiple of other indicators that I've built that show us in real time, real things. You need to go check out the ABC cycle, the market shift indicator. And if you want to use the fair value gap indicator, you can. If you want to use the ORB indicator, you can. All of them work. It's just your preference, right? Everybody's going to find something they like. So what are we looking for? We're looking for a low, high, pullback, and an extension up. This is a fib. This is the only pattern in the market that matters, okay? This is the only A, B, C, D that matters, okay? Now this is on a micro level, meaning micros have to happen before the macro event. What does that mean? If this ends up being a bigger time frame that does this, inside this move, inside this AB structure, for this imbalance move, right, this imbalance, we have to have multiple of these, right? Where price is doing this, right? And then it gets to an area of resistance and it pulls back, right? It pulls back into an area of support, which this is a C phase, but supply or demand zone, right? Demand zone. We hit a supply zone up here. Supply means sellers, demand means buyers. And all of a sudden we repeat the process and market breaks out and goes up and takes out this structure. So what is this? The green that we got marked up is what we call a micro move. Now you can go watch the micro video. And there's also one, it's a macro move. You can go watch the macro move. Macro is 5, 15, 30 minute, 1 hour. Micro is 1, 2, 3, 4 minutes, right? I usually trade it only on a 1 and a 2 minute time frame. So with that being said, you have to have micro move before you get the macro move. You have to have a micro pullback before you get the macro extension. And in that extension, we have a micro move to get up out of the macro move. So learning your micro fibs and how they work and how they exchange in price is a very key element, something you definitely want to learn because you can get in, get your money, and get out. Now, I'm just going to show you real fast. I'm not going to spend too much time on this video. Here's a high. This is an example. We broke this low right here. So here's a low. Here's a pullback. And here's an extension. Okay. This just happened tonight. We traded this tonight. I'm currently up. I don't even know how much money right now. This is what I'm up tonight on all my accounts. $530. So we traded the Asian session tonight. So it does work. Now let me show you how this works. So my fibs, right, look like this. Okay. My fibs look like this. Red goes to red, blue goes to blue, green is always hitting. Green is 150%, and it hits 98, 99% of the time. So what do I do? If this is an A structure, this is B, we're looking for a pullback into C to go to D. Remember, there's only one pattern I trade. That's these patterns right here. That's it. I don't trade any other patterns. Okay. So if this is A and that's B, I'm going to pull from A to B to get my target, which should be down here. That's what those other lines are there. So if I go from A, 0 line to 100%, right, to 100%, I'm going right here. I should be able to get this, price should be able to move to this target right here. Okay, so where am I shorting? Well, I use other indicators to get into the short, but anything that pulls back and breaks structure. So if I break this structure here, I'm going to go short right here with I'm going short right here with a stop above this high. So it'd be $890 to make $1,780. Or if you're trading on the micro side, that's $89 to make $178. Whatever you want to do here, right? So that's a micro swing. Okay, you're in the move for 5, 10 minutes, 15 minutes, and you're out. Let's go to the next one. So that's the first swing level. Then what do we have? This is A, this is B, that's C, that's D. Now what happens? C becomes A, D becomes B. We pull back into A. We're looking for another extension to the downside. That's what we call a wave, okay? That's what we call a wave. Some people call it Elliott's wave, whatever you want to call it. I don't really give a damn about that. But so if this is A, B, and that's C, and that was D, now this is A, and that's B. So now we're looking for another move to the downside. So eventually price will come down here and hit. And as you see, we have an A, we have a B, we have a C, we swung down to D. Again, looking for price to break structure. Where is it going to break structure? Well, if we take this white line right here and we say that's our B structure, we're looking for a break of this structure. So over here, you would be taking a short and you'd be putting your stop above this high. So you got $1,000 to make $22,130. Or you got 1,000, one contract, $100 stop loss to make $200 on the micros, whatever the case may be, right? So how do we know this, right? You could draw a counter trend line. You could take it up here. You could take it at the break of this structure. The idea is we're making lower lows and lower highs, and the market should continue to do it until we make a higher high and higher low, and the market gets that reversal. So very easy, simplistic idea. If you want to use my fibs here, there will be another video just tailoring how to set these up. So you'll be able to pause that video and put all in the numbers. These numbers are not regular numbers. I set up my fibs like a bank does. So when I take a trade, I can anticipate the A, B, and then I can measure the move for the pullback. I'll show you how this looks. So right here, if I wanted to know where price was going to pull back, I would just do this right here. Okay. I would go from this low to this high. I'm looking for a pullback into this red zone right here and these red lines. So we're looking for that 71% to hold. And as you see, it tagged it, pushed down and tagged it again. It pushed down and pushed up. You could trade the 71 if you wanted to, right? There's a counter trend line right here. You could be getting in up here instead of down here. I'm just teaching you the breakup structure right now, not the way I trade. I trade all kinds of different ways, but I teach you how to do this, right? Because it is a true and correct way to trade. Every move in the market is a measured move. Nothing in the market is random. Once you understand that, then you can become a professional trader, right? You can turn this into a business. You can make money trading. You can help people make money. You can teach them how to trade, whatever the case may be. But no move is random. Everything is engineered or on a algo that represents what I'm showing you right here. Okay. So this is a short. I'm showing you a short. Let me show you the long we took this morning that also made $600 this morning. So my market opens up at 7:30 in the morning. Look at this beautiful liquidity sweep. We tapped out the high, pull back into the low, and we hit an extension. Not only did we hit the extension, we pull back into the break again, and we hit another extension. Right now, on the micro move, I'm on a 1 minute time frame. This is A, that's B. I'm going to go right here and pull it up. This was our target from today. I've already erased these, but this was our target for today. When the market pulled back, we bought it. We went long. I got out right there. It pulled back. I went long again. Now, there's multiple ways to trade this, right? So let me show you. The sells, the shorts almost came in on this. So we had to pay attention, right? Because this is a 50-50 play. And we'll go into more of that in the macro and the micro videos. I'll go back through the 50-50 and show you what those are so you know how to play those. We're not going to cover those in this video. What I'm showing you is the fib structure and how this works. So this would be your A, that would be your B, and this would be a C. In reality, this is also an A, this is also a B, and that pulled back for a C. So that puts this circle in a 50-50 zone. Not the best look, right? Because we could continue down short or we could break out and go long. You have to make a decision in this particular assessment whether you're a bull or bear for the day or for an hour or for 15 minutes. Am I getting in, getting a little money, getting out? What am I doing, right? And in this case, we said, okay, we swept the low, we found buyers. I trade order flow too. So trading order flow helps me identify where the absorption is happening and who is in control of the market. And I like to trade with those guys. So that was our C phase. I also have indicators that tell you to take this long. So multiple ways for you to trade, and that's your ABCD swing. So where would I trade this? Where would I get in? Right here is a break of structure. So I'd be taking the long right here. This is confirmation to me, right? These two candles close higher. I'm looking for a retest and I'm in. So that's trade one. This pulls back. That's trade two. Pretty simple. Now on this particular deal, for you to take trades right here, I'll give you an example. It's 2 to 1. You're getting 2,000 on $1,000 or 200 and 100. And if you took the trade here, you're about the same, right? $1,100. Market was real volatile today. To make $1,400, or you're going to push up into the gray box, or maybe you take off 500 and you take off 500 on the second trade and you're done, or maybe your goal is only $400 and you take $200 off each one. It doesn't matter to me what your goal is. What this matters is being on the right side of the trade. Okay. Here is a pullback and another long on the macro event. So if I pull the next fib level, I don't make this up, guys. If I pull the next fib level, right? Market was trying to, I'm up too high. Market's trying to get to here off the next fib level. All this did was sweep the highs, push down, find more buyers. So where are we at? That's an A, that's a B, that's a C. Price is coming up into here. It's going to sweep these highs, and then we're going to sell off. Now, the deal up here is this is a supply zone. So we had a hard time breaking this area, 30,100. The supply zone. Demand was here, demand zone. Then price shifted up into a demand zone here. This pulls back into that demand zone, and we go back up into supply zone. Demand means buyers, and supply means sellers. I have a video, it shows this, and an indicator that shows where the supply and demand is in the market using A, B, C, and captured trades, captured orders. You're able to see those. Go watch that video. If you are joining the YouTube for $10 a month, all the indicators and live trading sessions are included. So, I mean, $10 a month, come on, you get access to over 40 different indicators that are non-lagging and built by me. And they all represent price action, and they all represent order flow. So with that being said, you're always on the volume and the price side. So let's look at one more. We go on to Friday. I took a long on Friday in the morning as well, right before the holiday. I took this long right here. We went into a micro swing right at the open. We swept the low, went into an inside swing, pulled back. We held price out of this demand zone, which comes from over here. They swept it, but they had to go find some more sellers. So we knew that was going to happen. Oh, look, there's that pattern again, right? That ABC swing. And we went long right here, and I got my money and I was done trading. I did call the short. This would be a short move to go short. I called that short here, so people got in a trade and made money in the live. I was already at target. Now, let's talk about it. What is a macro event? This high, slow, this, right? Now this was a pullback off of this low, but we swept it, right? Price goes into a corrective move to the upside. This is an A, that's a B, that's a C to swing down to D. And I said this move here, if you trade it, it's against the trend. The trend is trying to turn. It's trying to go into reversal. But ideally, we come back up into the demand zone in order to sell price lower. We need more sellers. So what do they do at the open? They run price up. Yep. Yeah, you understand it. You run price up, you get buyers in, they take out the buyers, selling the orders, and price moves down. Remember, this is a one-sum game. They can't just put in a bunch of orders and randomly change the market. It doesn't work that way. So when we go through the ABC swing, this is a macro event. But in order for this macro event to go short, it had to have what? A micro event to get up here. There's those patterns that we talk about trading, right? A, B, C, D, A, B, C, D, A, B, C, D. And then what happens? We're in the what? Demand or supply zone to sell off. It's pretty badass, right? So what do we do in the C phase? We look for short. How do we know we short? We took out the last low. We went into an ABC swing here and we went lower. So I'm going to pull my fibs out once again just to show you that if I mark up this high and this low, that puts me to this one. If I go to this one and this one, that puts me to this one. If I go over here off of this high, hold on, let me show you. If I go off of this high and this low, that puts me back into what? This zone down here. Yes, if I want to know where I'm going to pull back to, just to show you I'm not lying, look, we're looking to pull back between the 38 and 71%. Oh, look, 71% held again. Let's go down here and do the same thing. Reverse it. Where did we push down? 71% we held. Boom. Okay. I'm not making this up. It works every single time on the micro side. So I will be doing a fib on, I will be doing a micro, and then I will be doing a macro video. Yeah, I'll upload them. They'll be in the school office. You'll be able to go back in the classroom and look at them. So what it does is it teaches you how to trade the micro moves inside a macro move, right? So maybe the macro move is short, but you're short on time and you want to trade. So this pushes down, creates a low. We pull back into that zone. This is an inversion long, but it's just a pullback to go further short. And I teach you how to trade these. So you don't have to sit there for hours and hours and hours and not get any trades. You can come in and get your money and get out. There's also indicators that I built that help you do this as well. So I hope this works for you. I hope you understand it. Again, there's a video in there for you to set up your fibs. So I'll make sure that we connect all these videos together for fibs and you have access to them. So they don't lie, man. They are, yeah, you're a believer of this now? Yeah. Well, I mean, no matter where I go, look at this right here. Look, here's a high, here's a low, another higher low. If I pull the fibs off of these bottoms, we have rejection right here, right? So now if I go here off of this bottom and this top, the question is, are we going to come down here now? Well, I guess we just bounced off the 150%. So we are strategically selling off right now. So, and every one of these are a measured move. Now, when we talk about waves and we talk about positions in the micro, we have 4 levels. This would be 1, 2, 3, and you're going into your 4th one. Your 4th one, your 4th wave, or your 4th pullback in a move is always the most dangerous one. Usually 4 waves, and I wait for that reversal, right? And what am I looking for in a reversal? I'll show you what I'm looking for in a reversal. Let's go back to a low. So with a reversal to me would look something like this. You have a high, a low, we reached the high, we took out the low. So this is what we call a liquidity sweep. We put in an A structure, we put in the low of session, we popped up, we pull back into that demand zone of this low, and we went into an ABC swing. So to me, this is a reversal, especially when we start making higher highs and higher lows and we're not able to bring price back down. When I'm able to look at order flow and see absorption on the sell side and big buyers come in on this side, I know that I'm on the right side because now I'm buying with the market. I'm buying with the bulls, right? So The reversals are easy to spot in order flow and inside the fib scenarios here. So what do we learn in this video? Most traders only draw one fib, okay? And they think they have the whole trade figured out. They do this. They say, "Oh, you know what, man? This is a reversal. I'm gonna go long here. I'll just show you. That's a low, that's a high. We're gonna pull back and break back up. I'm going long right here, and all of a sudden it goes against him and takes him out." And he goes, "What happened?" "Well, you didn't make higher highs and higher lows here. You never broke the A structure. This was the A structure." So people don't really know how to trade fibs. Most of them don't. They just got ideas. They pull these things and say, "All right, well, we get in this zone, I want to go long. Or if I get in this zone, I want to go long. Or if I get in this zone, I want to go short." And that's not fibs, guys. I mean, they're using fibs, but they're using them the wrong way. So they think they're using the fibs the way that they're supposed to, and they get the whole trade figured out, and it doesn't work. But the market has inside swings and outside swings, and they don't know anything about it. So I'm showing you how I use the micro fibs and the macro fibs to find cleaner trade areas and better entries. And of course, the smarter targets, right? The inside targets, outside targets are always the smart targets, because when you take a trade, most fib traders say, "Well, if it breaks this level, it's going to keep going." Well, no, when you take a trade, you need to have an idea. So if we're not in a demand zone here, we're looking for that trade now to come down to this box, right? Everything's measured move, sweep the low, continue to sell down to here. Let's give it a few minutes and see if this happened. So what are we talking about, right? So today we're talking about the Fibonacci levels, but more specifically how to use the fibs on the micro swings and macro swings. There are videos that show you how to do just a micro. There are videos that show you how to do just a macro, and there's videos showing you them using both of them together, right? Most traders make mistakes drawing fibs and thinking that they got the whole trade figured out, but the market usually has more than one swing happening at a time, and a lot of people don't cover this. So it's really stupid to only mark up one side of a trade when you know that there's two sides of the trade. You have the pullback and extension, you have the breakout of an extension, right? So again, like I was saying, this is a imbalance. We swept that low. This is a balance. Now we're creating another imbalance, right? Or a continuation. This was just a pullback for a continuation. Can we reverse here? Sure, we can. We can come off of this double bottom and price can go back higher, but we got to start making higher highs and higher lows for that to happen, right? People try to catch the bottom, and that's a no-no. So the inside, the larger move, you always have smaller pushes and pullbacks. Those are the micro levels, and those are what I like to trade because they're easy money. The Fibonacci comes from a number sequence, but in the trading, we mostly care only about the ratios that are common, that most people use that are common would be the 23.6, the 38.2, the 50, 618, and the 78.6. Now, I don't use those, okay? As you guys see here in my levels, I use a 71, a 618, a 50, a 38.2, and a 23.6. And the reason why is because I trade in NASDAQ and RTY and I trade futures. A lot of the future contracts do not bounce off of these other levels, or if they do bounce, they bounce on the bigger time frames like 5 minutes and 10-minute, right? 15-minute. So the common extensions are 127.2, 161.8, which I have, and then a 261.8, which I think is too far. So my targets 150 is the green line, 150% of the move. This gets hit about 98% of the time. So every time I mark this up, that's the target I'm trying to get to. The 168 hits, right? So if price pulls back in the blue area, we get the blue area, we pull in the red. If we pull back into the red zone, we're looking for the red zone target, or at least the green target. If you pull all the way into the blue zone, you're looking for the blue target, right? And any of these will go to the green zone. So That's why that 150% is there. So that's how I have it set up. The common extension levels, I don't use them. Mine are a little bit different. They're a little bit smaller. And here's why this matters. The macro fib gives you the big picture, right? The macro is a bigger time frame. It helps you see larger retracement zones, major reaction areas, bigger possible targets. The microfibs give you precision and entry and levels and smaller stop losses. So that's why I like to trade them. It helps you fine tune entries. You get the smaller pullbacks, short term targets inside the larger move. So first I find out the outside swing, then I look for the inside swing, or I look for inside swings and figure out where we're at, and we take price from there. If price made a large move from a major high to a major low, that becomes my macro bearish fib. I draw from the swing high to the swing low. It's pretty simple, right? That gives me the larger structure. Then I look inside the move for smaller swings. That might be the last push up or the last pullback or the most recent leg price in reacting from. So this becomes my macro fib. There's a lot of confluence in the market, which means multiple things are pointing to the same area. Those are the trades I like to take. So, if we're pulling back into 71%, we're in a C, we're making lower lows and lower highs. Oh, it's a no-brainer. I do draw trend line liquidity as well. So like if I wanted to short this and I was in a short, if we broke above the structure, I would close the short out, knowing that it has to actually break this structure. But if this pushed up through here, I would probably close it out and then look to see if we pull back to retest to go long. And then we get that reversal that I was telling you that I look for. So but right now, this would be the target, if you shorted up here. Or if you shorted this one based off of this would be the target. So anyways, guys, I hope this works. All you got to do is go look at the setting up Fibs video. There's a setting up Fibs. I show you how to do these in NinjaTrader, and it's a real short, like 5 to 8 minute video. You can always go look at that one. Setting up your Fibs is called, and that will show it. There is a macro and a micro video out. If you watch the micro, that's the smaller time frame move, and the macro is the bigger time frame move. What is really good when you're trading these, you're using the PDL, PDH, OVNH, oh, sorry, yeah, ONH, ONL, and you're using POC. What are these? That's prior day low, prior day high, overnight low, and POC, point of control. So what does this tell you? If you're trading down by the overnight lows and at the open, you're probably going to sweep them and then go long. If you're trading by the prior day high, you're probably going to be looking for shorts or a break, retest, and long. If you're trading by the overnight high, you're looking for a break, a retest, and a long, or a break of that retest for a sell. These are great areas to find the ABC swings in and get in and get your money. We find them almost every single day. So when we're trading, so those are supply and demand. Those are entries that usually your liquidity is sitting in, and you're trying to determine whether or not this is long or short. So hope this video helps. Again, go check out the setting up your Fibs video, And then you have a micro video, and then you have a macro video, and you'll be able to jump in those, learn the micros first, then go into the macro, and of course set up your Fibs. So every time you pull them, you will, there's a brief description on how to use it as well in there. So I think it's 8 or 10 minutes long. It's not very long. So you will get a little crash course on the Fibs and how they work and how I set them up to trade with the algo. So all right, guys, with that being said, I will see you guys later. Any questions in there? Any questions in the chat, guys? Great information. Awesome. You're going to start using these? Awesome. You're going to watch the video right now. Nice. Yeah, the micro and macro. Uh-huh. They have a thumbnail on the back office. Just look at it. You'll find it. All right, guys, I'll see you in the morning. You guys have a blessed night. Thank you. I'm out of here.